Hello guys, this is Punit and I'm a price action trader. I usually trade Emini contracts on 2000 tick chart for a scalp, and if I have to swing trade, I go with 1 minute time frame on micro Emini charts. I also do 1 minute time frame review, and the trades which I take for the day, I'll review them too. If you are interested in more such videos, I'll leave the link in the description below. So here in this video, we are going to review the 5 minute time frame end of day. This is 11th of April 2025. So let's begin. And if you have any questions, please leave them in the comment section below. I'll get to them as soon as I can. So the first bar of the day is a bear doji bar. So nothing to do here. The second bar is a strong closing bull bar near its high, also breaking above the EMA. But what is the context? We are still in this huge range, which is from yesterday, and EMA is quite flat. So it's better to wait for a 2 bar breakout or a 3 bar breakout and then to go long. Even then, you should be wary of yesterday's close acting as a magnet, yesterday's pivot high acting as a magnet. And yes, I just call them magnets, so you know that price will go reach there. But that said, we don't know if it's going to act as resistance or support. What do I mean by that? We don't know whether it's going to break out of these levels and go head higher, or touch those levels and then try to reverse down. So can you go long here? Put your stop loss down here and hope for a scalp up? You can. I wouldn't. I would wait for more bars. Okay, now if bulls were all that strong, would this bar be overlapping so much of the second bar? The third bar is almost overlapping 75% of the second bar's range. So can you go long here? Yeah, yes, you can, but for the same reasons, I wouldn't. Now, 3 bars consecutively closing near their highs. Can you go long here? You can. You can do that. You put your stop loss here or here or here. Why would you put your stop loss on yesterday's pivot low? You're hoping for a double bottom pattern and for a swing up then. Okay, 4 bars consecutively closing near their highs. Can you go long here? You can. If suppose you bought the close here, bought the high of this bar, bought the close here, you're expecting the prices to go higher, right? But if you see the next bar was a trap bar. What do I mean by trap bar? You're disappointed. You wanted price to head higher, but now you're seeing this inside bar. So what do you want to do? As a scalper, you would want to exit at the break-even price. Maybe you bought here, so you're waiting for the price to rally here and then exit. If you bought here, you should be waiting for break-even exit. If you bought here, again, you want the price to rally to that level and you exit. So where is your scaling point? Suppose you bought the closing of the 4th bar, you put your stop loss here. This is the 50% mark. So let's scale in somewhere here on a limit order, that is. So this bar, bear doji bar, has a huge tail. So that is the reason all the scaling bulls got their limit orders filled in and they're trying to exit at break even, which is somewhere here, or for a small profit on the second entry and for no loss on the first entry. Now price did reach all the way here. So all the bulls got their exits. Now the bears know that. They are also seeing that. So can you enter on short trade for scalp down? Yes, you can, but big up, big down. Also, we are still in a trading range. So you'll have to find setups on the bottom third region and short setups on the top third region. This is already near the bottom third region. But if you did take this short trade, it's better to get out at the day's low. So it wick down and then you see an inside bar. Now what is happening? Price tried to go higher once. If you go to the 1 minute time frame chart or a 2 minute time frame chart, this will be visible. This would be a bull bar closing near its high and then a reversal again. Now this is micro double bottom. Also 1, 2, 3. So micro wedge bottom. Also double bottom with the day's low. Also double bottom with the yesterday's pivot low. So can you go long 1 tick above this bar and put your stop loss here? You can. Either you get out at 1:1 risk to reward, or you exit somewhere in the top third region. Okay. Suppose you didn't get this exit and you waited for a 1:1 risk to reward. Suppose you're strictly scalping, it's better to exit 1 tick below this bar's low and then wait for another setup. Double bottom, also some sort of a micro edge bottom. You can go long 1 tick above this bar's high, put your stop loss here or here, and then hope for a measure more high. Okay, now this is also 3 consecutive bars closing near their highs with not much overlap. Here there was too much overlap. Also, we didn't know that these bars might act as magnets, but now I'm telling you can go long here. Okay, here also if you see there is one more 3 bar consecutively closing near their highs, but this is an inside bar, so I wouldn't call this pattern as a 3 bar breakout pattern. Yes, the overlap is there, but not as much as this bar. And what is the context here? Yes, we are still in a trading range. We should be finding short trades in the top third region. But why can you enter here and look for a scalp up? Who is stronger here? Are bulls stronger or bears stronger? 4 consecutive bull bars closing near their highs. Only one bear bar strongly closing. Bad follow through. Again, a reversal. Bad follow through bar for bears. Strong breakout bar for bears. Bad follow through. Inside bar. Reversal again. 1, 2, 3, 4 bars closing near their highs for bulls. And now again a weak bear bar. Strong bear bar closing near its low. Again a weak bear bar follow through. Only one more bear bar closing near its low. 3 bull bars closing near their highs. So who's stronger again? Bulls seem more stronger, right? So I'm hoping that the trading range will be giving me a bull breakout rather than a bear breakout. The odds are still low, but since we got 3 consecutive bars closing near their highs, I would say it's at least 60%. Okay, now you got your micro stop. Also, it's testing the top third region of the trading range. Can you go short one tick below this bar slow and hope for a scalp down or a test of this bottom third region? Yes, you can, but what is the context here again? If you see, after this 3 bar breakout, almost 8 or 9 bars have been closing entirely above EMA. So 9 bars which are acting as moving average gap bars, plus this is also a tight channel. So why would you short here? It's better to wait for a second entry if you want to short, and that second entry should be breaking out below the EMA and closing strongly. Also, if you notice, EMA is starting to slope upwards. If you did enter on the short one tick below this bar, you got stopped out. Also, this bar is breaking out of the entire day range. So this is a 18 bar breakout trade. If you enter a market order on the close of this bar, you put your stop loss here or here and hope for a measure move up. So there are a lot of ways to mark this measure move target. Now we get 4 more consecutive bull bars closing near their highs. But what is the context now? This was leg 1, some sort of a pullback, and then a leg 2. Market usually moves in pairs. So leg 1, pullback, leg 2 means a deeper pullback. So it's better to wait for a pullback to the EMA and then hope for a H2 setup or a H1 setup. Also, we are nearing yesterday's high if I have to mark that price. So maybe we'll touch that and then give a micro double top and reverse. We'll have to see. Okay, this was the first entry for the short trade. People who took this trade got stopped out here. Now this is the second entry, also very close to yesterday's high. So that is a magnet, and right now all the context points towards reversal rather than breakout on the upside and then price acting as support. So you can go short one tick below this low, put your stop loss one tick above this bar's high, and then hope for a scalp down. Okay, now you got your scalp down, also test of EMA, and that is happening with the micro wedge bottom. Price tried to go higher once, twice, and this is the third time. Yes, this bar is not very strong closing bull bar, but see the context, what is happening. If I mark a gap between this bar and this bar's closing, this bear bar's closing, there is still an open gap. Yes, the open gap is a negative or a pseudo gap, but it's signaling to you that it's strong enough to go higher. So you can enter one tick above this bar, put your stop loss here and hope for a scalp up or test of recent high. Okay, we got a strong breakout bar, another strong breakout bar, and if you see, we got our measure move target. Whoever entered on the 18 bar breakout, they got their scalp out. Or at least the first target hit, the second target never hits. Okay, now what's happening? Yes, we are still bullish, EMA is still rising, but what is the context again? If you see, this is more like a channel now. If I have to draw the channel line, price reached the top region of the channel line and it's trying to reverse twice. So this is a good short trade. You enter one tick below this bar's low and put your stop loss one tick above this bar's high or here and hope for a test of the bottom channel line, or you exited the test of EMA. Okay, again, micro wedge bottom. So you exit here if you haven't already. Also test of the channel line. You exit there and also enter here. Why? Because this is again a micro wedge bottom and we are testing the low of the channel line, also test of EMA. So can you again hope for a swing up to the channel line or scalp out? So this is again an open gap, but what is happening right now? If I have to draw this gap, the gap from this bar's open, this bear bar's open, has been closed by this bear bar. So it's signaling that bulls are not that strong right now. So it's better to scalp out. Also, EMA is starting to flatten and 18 bar breakout traders got their profit target met. Okay, now this is the second entry, also a H2 buy setup. Can you go long one tick above this bar's high and put your stop loss one tick below this bar and hope for a swing up? You can, but again, too many bars within the pullback structure, and also we are quite extended in the channel and price is behaving like it's in a trading range. So even if you do enter, it's better to just scalp out. You just went into a trading range, nothing to do there. If you bought the high of this bar, you exit somewhere in this area. Okay, that's it guys, thank you.